Hi there traders and welcome to Trade the Structure. So now what I want to talk about in this video is the ability to know when you should trade and when you should stay out. Okay, so I think that's a very important thing, obviously, with your trading, and it's not something you can learn straight off the bat. Okay, so a lot of traders, especially when you're using different time frames and when you're jumping down to the lower time frames, especially, I like to trade using the 30 when I'm intraday trading, the 5 for my entries, and the 1 minute for my execution levels where I want to execute. Okay, but generally I'm using the 5 and the 30, and I'm trying to keep out of that mess that you can see on the 1 minute charts. So a lot of new traders, like I was saying, they will jump in and out, left, right, and center. So everything is a trade. They're looking for that setup, but they're not taking into account the finer details. So to me, it's like blindly throwing a dart at a dartboard. Okay, you're trying to hit the bullseye, but you will maybe, the odds are that you probably hit it. But if you take a bit of care and time, and as you get better, there'll be more direct hits or more closer hits than there will be, these random misses everywhere. So what you're doing is improving your strike rate. And it's the same in trading. If you trade everything that you see, okay, your strike rate is going to be pretty bad, I'd say, and you're going to have more losses than not. It's just a statistical, number. Okay, but when you try to refine it and you're looking at some finer detail, when you improve your trading, especially when you've built a trading system, okay, and you've knowing what you're looking for, and you've done your back testing. I think that's the key. You've done your back testing. You know what you're looking for. You know that, okay, when so and so happens, X, Y, Z, then I want to trade. Okay, if it doesn't happen, I'm probably better to stay out because the probability is going to be against me for when I'm trading. So it's pretty much like I said with the dartboard, with trading, same sort of thing. As you refine your approach, it's not going to be such a scattergun approach to trading. It's going to be more of a refined, determined approach to trading. So what I'm going to talk about and what you'll see is some trades that I did on the Hang Seng yesterday. And admittedly, I did jump in on the first trade. It was a setup, but once the setup played out later on and looking at the finer details, it was a much better trade and I can go a bit heavier. So lately, I've been a bit light on the first trades because it's been a bit tougher. It's been a bit messy. And that detail, even though the setup's there, it could go either way, and generally at the start of the session it is. It's chopping up, it's chopping down, and you can get caught in a few losses before you get on the right side of the action. So what I've been trying to do, just to refine it, is going a little bit lighter on the on the quantity I'm doing on the earlier stage of the trade. And when I start to see the trade and I've got those, that finer detail in my favor, and it's showing what I want to do, it's showing clearer approach to the setup, then I'm going to go a little bit heavier. And generally that's where my day is paying off. Okay, so this is pretty much one of those days. We'll talk about two particular trades. We're looking at the 5 minute chart here. Okay, so if you've been following me for a while, I use my exponential moving averages. I generally have a 10, a 20, and a 50, or the 20 to 50 I go by a lot, and the 10 is just a bit extra for that speed of trading, especially down to the 1 minute time frame. And I use MACD. Now I could flick around on the MACD to set it at 10, 20, or I set it at 20 and 50. Okay, today I've got it at 20 and 50. And what I'm trying to do essentially, I'm trying to go with momentum. MACD's down, it's pushing down. You can see like here, the trend is down. I want to be biased down. Momentum's down, okay? I don't really want to trade it when it's looking like it's getting extended, but sometimes the setups are there and you're probably going to take it just knowing that in the back of your mind that this may not have much to go. But what I'm also trying to do is get the EMAs in my favor. If they're down, the 10 below the 20 below the 50, I'm trying to trade short and reverse for the upside. So in this case, I want to be biased short, okay? So there's two particular zones. We're just drilling on that I'm trying to, I was basically looking to trade off. Remembering the 5 minute chart, we'll show you the one in just a moment. This is the 5 minute chart here, and you can see, okay, we've had a bit of a pop up. The open was here, market pressed down, had a bit of a flush up. That's when that green candle there is when the underlying index opens. It's 15 minutes after the futures market opens. It flushed straight up. Okay, the very next 5 minute candle, straight back down again. So you can see that, okay, they were trying to push it down. Then we've got a bit of a pop down here, bit of a retracement, and then we started to fail at a lower level. Okay, so what I'm always looking to do, you've got your high put in place. Potentially, if we're not going to get up there, we're probably going to put in a lower high. My bias is down, so I want to trade off a lower high, and that's what I'm looking for. And I'm obviously running down to my lower time frame charts to try to get a better entry. But this is pretty much, I've spoken about this before, 3 candle setup. Go and look at my YouTube channel. Go to the website, www.tradethestructure.com. There's more information on there. Subscribe for free, and you'll see the videos on there. But I talk about this as a really nice entry. And what I like to look at is that 3 candles. So I've got a high put in place, green candle here, a new high put in place. So you've got 2 highs. And I'm basically trying to trade the below through, that low, not the low there, the first and second low. Okay, so 1, 2, 3 candles, trade through the low, and that's roughly that level there is where I want to execute. Okay, so that was the first trade. That's coming down. I'm looking momentum starting to roll back over. You got a high put in place, lower high put in place. I'm expecting this low to go, and there was a support zone which is actually traded into a bit later on, traded into that support zone. So I'm looking for that red candle to continue on down into that support zone. So as we can see, it didn't pop back up, and then I'm basically looking this secondary trade, which we'll talk about, is the same sort of scenario. You've got high pull in place here, tries to go into this high, fails. 1, 2, 3 candles, okay, trading through the low. So that's basically the level I want to get involved at, okay. But what you can see, it's different price action. When we start looking at that 1 minute time frame, the price action for this, what we see playing out coming into the trade, what has already played out, the hard right edge we're at the moment. So the hard right edge is right here, okay, right on this candle. Anything before that is what we've got to work with, the price action we've got to work with, and how we're trying to build our picture. So when we get to the second trade, we've got a few more candles in play, and to me, it is a very, very different, very, very different trade. Whereas the first one, yeah, it could have gone either way, and there was an argument for both sides. Okay, so what you got in front of you now is the 1 minute chart, and it's the same price action. Okay, so we're looking at what's on the left hand side. We're on the far right hand side. So this is what I was looking at when I was coming into the trade. Okay, so the first trade anyway. So you can see the price action is pushed down on the 1 minute. We popped back up. We made that high, like I said, on the 5 minute. We pushed down. Now what we've got is that leg down on the 5 minute was broken down into 2 waves, okay, on the 1 minute. So you got wave 1, press it down through the low. It doesn't get down convincing. So that's sort of like something you really got to take note of. Doesn't get down through here convincingly, pops up, makes a lower high, gets down again, but doesn't get down. The first time it sort of flushed through this low, it bounced back. You got a couple of green candles. Then it had another dig to make a new low, and really wasn't convincing to the downside. So to me, okay, we have a bit of a pullback. Now, what we did get that pullback, but what we're looking at here on the 1 minute chart, we broke, this is really the anchor. So once you break through this high, to me, you've got to be a bit concerned that we're not going to get the 2 legs back up again, okay? Like we got in the downside, 1, 2, we're not going to get 1, 2. So here, in the back of my mind, yeah, I've got, potentially we're going to get 2 legs up, but I've got my setup on the 1 minute chart. What I'm seeing on below the EMAs, okay, that's fine. And I'm looking for that 3 candle setup in the EMAs. That yellow level was the level we're looking at in the 5, the 3 candle setup. Now I'm drilling that down to the 1. We've got the break through the low. I went short in here, and my risk is basically 40 points or just around that high there. I like it to be above, but if I can't, I don't really want to risk too much more than 40. And I should be expecting that to go down. Now, what I'm looking at, what I should be seeing is the MACD. It should be down. We should be something like this. It's crossed. I get the setup when it's already down, not when it's still above, okay? When it's still basically heading up. So at that stage, as soon as I got that rejection, to me, it's like, all right, then maybe, if I get stopped out, I think we're probably going to head up at least to this high. We're going to head back up to these highs, okay? So as you can see, when we get to the second trade, it didn't play out. Basically, I got in here. I think I floundered around. I was up a few points by 2 or 3 points, and then it turned around and reversed, and I had to cut it pretty quickly. I think I downed about 30 points on that trade. Okay, so we'll get into the second one now. Okay, so here's the second trade now. Same price action. This is where I went short. You can see actually I was up, like I said, a couple of points. Got in straight away. It turned around, reversed on me. So I didn't really have much choice there. It sort of popped up. I think it popped back down here. I was out. I took it off. And what I was looking at here, okay, you've got high, low, high, low. So what I was talking about before, you got 1, 2 legs down. If you get that secondary leg up off this high, low, which was starting confirmed, you can see the MACD actually didn't roll over on that entry, and it continued to stay above. Okay, it's still pointing up, heading to that 0 line on the MACD. So I really want that to be rolling over, to be pressuring down. So the momentum is down. It's not reversing. It's not going from oversold back up to the 0 or back up to overbought. That sort of scenario. Okay, but at this stage on the 1 minute chart, remembering the 5 is down. That's fine. That's in my favor. But the 1 is not. The 1 minute chart is not. It's showing that there's still potentially another leg up. So what I'm looking for, you got this little pop up here. Okay, it failed just at the previous high. So as soon as we fail at that previous high, I call that an RTF. You might call it a double top. So that to me is showing a clear willingness of sellers to step back in at that level, okay, and cap that level. So what we are getting on, it starts to play out on a bigger time frame, the 5 minute time frame. You've got that lower high coming into play. And as soon as I get that RTF, in my mind, we're either poking for these lows or these lows. Okay, at the very least, you're probably going to head back down to the low of the day. Okay, it's going to take out some levels because what it's done is dragged in some buyers, maybe dragged in a few more, it's failed, and it's going to start to squeeze those traders out, those buyers out, and head down. And it's also going to activate some more shorts into the market. Okay, and that's pretty much what it did. So I've got my same setup here. It come to play out. You've got a couple of candles there. Look, I could have been a bit more aggressive and taken a short just up here, and I would have had sat through probably a bit of heat. But ideally, what I'm looking for, the same sort of setup here. Okay, got my lower high below the MAs, 3 candle setup, 3 candle setup, and it played out quite nicely. Okay, we'll show in just a minute the full 1 minute chart as it played out, and it went down, and I took a nice little handy profit. But you can see that setup there is the same. The difference is we've got this RTF playing out. So that RTF, to me, it negates this secondary leg up, okay? So at this stage, you don't know if it's going to roll or the secondary leg up. As soon as it failed, my expectations are that it's going to at least take out that high and probably trade up to that high up there. I was thinking about it long, but the problem is the 5 minute chart, it wasn't in my favor. So I'm sort of not looking for that to go against a 5 minute bias, because that 5 minute bias is still down. Okay, just because of the 1 minute. And this is what I'm saying about getting caught up in that chop. That could have been a trade there off a higher low. You're going long. I went short, I went long, that failed. I went short, that failed. You don't know what's going to happen. So you're trying to put all those, like the 5 minute, the 1 minute, and the price action of both in your favor for a higher probability setup. And that's what it comes back down to, that, that scattergun approach to throwing darts, blindfolded, just throwing them randomly. If you actually take your time and throw it and aim for that bullseye, there's more chance you're going to get at least closer to the bullseye, and you're going to stop throwing these wild ones that can potentially hit the person that's standing next to the target. But anyway, you can see that RTF adds a big difference to these two trades. Okay, they look like the same. If you're looking just at the 3 candle setup there, they look basically the same. Okay, and there's another big difference too. You can see the MACD is now rolling over. Okay, probably about here it was just rolling over. So you're getting the MACD's in my favor. We've got my RTF, or your double top. Okay, that is a lot better trade than that initial trade. Okay, I took a loss on that one, but now I know that we're not getting that secondary leg up. This is a lower high in the 5 minute time frame. So that essentially you got one leg down, that's your leg up, double top, and we're getting a secondary leg down to push, potentially at the very least, I would expect it through that low. So by the time it comes in that low, if it starts to stall, I might want to take some off. I might want to exit completely, depending on what the 1 minute chart's saying. Okay, so let's get across to the 1 minute chart now. So as you can see, that was the entry. This one didn't play out, popped up, got my double top, lower high, same setup as I said, and it went all the way down. So I took out that with basically a clean move straight down. I think I exited some here, and I exited some here once it started to make this minor double bottom, okay, and it started to stall. So that there more than made up for that initial loss, okay, and that initial loss was on half size. This was on full size. So basically, point wise, probably double. I think this might have been a 30-point loss. I think this is about 70 all up, on average about 70 points on the downside, plus on the full amount as well. So you can see how by looking at that, this is rolling over. MACD is fantastic. By the time you get to about this candle here, the MACD is rolling over. The MACD, the momentum in the 1 minute chart is in your favor. The 5 minutes now in your favor. The setup's in your favor. The price action, essentially the price action, if you traded that completely clean, no indicators at all, price action is in your favor as well. And it's a lot difference on that entry than that entry there. So that's pretty much the crux of it. And like I said, I hope you got something out of this, and that scattergun approach, as opposed to looking at the finer detail and letting that finer detail play out. And as it does play out, you're adding it together to build that broader picture, to build a more refined picture. And it's only going to help your trading, I think. So there's a few key things I was mentioning there, especially to do with price action, letting things play out. You're trying to get that read on the price action is probably the most important thing, and putting that in your trading. So you at the very least, you might take that trade and make good money, but you may have taken 3 hits before because of that scattergun approach. Now, if you don't take the scattergun approach and you're looking to refine it, you may have taken that. I think that was a fair trade, because I didn't know if it was going to continue down. It didn't. I was quick to get out because in my mind it was going up. But once we got more confirmation and I got this side of the price action, then I know there's a better chance, a higher probability that's going down, and I want to get a bit heavier, okay, because I've got all this price action that's played out as opposed to just a little bit prior, okay. So you can see how trying to refine it, getting a better read on the finer detail can really help. Hope you enjoyed that, guys. And remember, if you do like what you hear, jump on the website and take a look around and subscribe for free. Cheers, guys. Speak to you soon.